Hello folks, Ashley Garner here with Ashley B. Garner and Associates Real Estate Professionals of Intracoastal Realty in Wilmington, North Carolina. This video is following up on the previous one about real estate investing. So today we're going to talk about where do you get the money to buy an investment property if in fact you do want to go down that road. And so I've listed here on the board the four most common ways to obtain the money to buy the investment property. So I want to go through those real quickly. First is cash. Well, that's pretty obvious. You've got cash of your own sitting in a savings account or a money market account or some kind of CD, etc., and you have cash available. So you say, well, I'm going to take my own cash out of the bank and I'm going to put it into this investment real estate property. Now that's an asset, just like having it in a bank account, except it's not in the bank, it's in a piece of real estate. That's a good use of cash because a lot of times the return that you can get is much higher than you would get in a bank. Now there are risks and there are extra things you have to do to earn the return, but that's why it's a higher return. Now 2 and 3 are what we call leverage. And leverage is when you use other people's money in addition to your own money to make money for yourself. That's leverage. So the first one is a traditional lender, and a traditional lender might either be a bank or a mortgage company. Now these lenders are going to require you to put down probably somewhere between 10, 15, but most likely 20 to 25% of the total purchase price. Now you would use your cash for that, and then they would loan you the other 80% or 85%, for example. Then obviously you're going to have a mortgage payment every month, and then you use the rent income, like we talked about last week, use the rent income to pay your mortgage, your taxes, insurance, maintenance, etc. The next, number 3, after a traditional lender, is a hard money or a private lender. Now hard money is one of those jargon terms in the real estate world. Basically what that means is you're borrowing money from a private individual or a private institution. Now the difference here is they will a lot of times loan you money on projects that a bank won't loan you money on. Maybe it's more risky, maybe it's outside of the scope of what the bank likes to lend money on, or maybe it needs a whole lot of work. So your only source is to go to maybe a non-traditional lender, which would be a private lender. The main differences here are they charge you a lot more fees, or points we would call it, and the interest rate is normally much higher. But it's a good means to an end. In some cases, it's the only way to get the deal financed, and as long as the numbers work, then you're okay and it's a good investment. And number 4 is something that a lot of people don't know about, but if you have an IRA or if you have a 401k or some other money in retirement account, you can take that money into an IRA and you can self-direct it. And you can buy real estate, or any asset for that matter. You could buy gold or art or whatever it is. The trick there, the IRS has very strict guidelines on how you do this. So you really need to get with some professional accountant or facilitator to walk you through the steps of exactly what to do. But it is a great way to take money that's sitting in an IRA, maybe not making the return you want, put it into real estate and have it make a higher return. So these are the 4 ways most common. There are other ways, of course, but these are the 4 most common ways to obtain money to buy real estate investments. As you can tell, I'm passionate about real estate. It's all I've ever done. I've bought and sold and owned and renovated rental real estate myself, both residential and commercial, and I'll tell you that it's a fabulous way to generate wealth and control your own financial destiny. Until next time, this is Ashley.